Hello everyone, welcome to Bald Guy Money. I know many of you are concerned about the weakness we saw in gold and silver prices on Friday. Some of you are even concerned that the intense gold and silver mania we witnessed with people lining up to buy precious metals in multiple countries over the past 2 weeks is a sign that we have hit a dangerous market top. But I want to start this video by unequivocally doubling down on what I said a few weeks ago, a statement for which I even took a little heat in the comments. We are due for a bit of consolidation in metals prices. These pullbacks and temporary price smackdowns that we are currently seeing in the market should not be looked at as bad things. They should be looked at as crucial opportunities to finally get in if you have been waiting to buy, or to significantly grow your position if you feel like you have fallen behind on your purchases. The reason for this conviction is simple. I have been tracking the numbers and trends, and the realistic price estimates I am seeing for the next move up are still massive. If you are just finding my videos for the first time, I encourage you to watch my last 4 videos to catch up on my detailed macro analysis. Based on my projections and allowing for a small margin of error, the prices that are likely coming in 2026 but no later than 2027 are enormous. My estimated average closing price for silver is $60 an ounce, with a high of $96 an ounce. For gold, I see an average price of $4,500 an ounce, with a high of nearly $5,800 an ounce. To keep everyone focused and motivated on securing the right amount of metals before this next great move up, I want to provide you all with a critical update. We are going to define exactly how much gold I believe you need to own to be in the top 20%, the top 5%, and the elite top 1% of gold owners. I am also going to compare my numbers to an external model specifically, the numbers generated by Grok AI. And we will finish this discussion by covering the most important question of all. What does holding that much gold truly mean, especially for people planning to fund their retirement with it? We will discuss how much gold I think you need to secure for retirement, considering a couple of realistic future pricing scenarios. Now, just before we dive into the data, a quick reminder. Please check out summitmetals.com if you want to buy gold and silver at a great price from a dealer you can trust, all while supporting my channel at the same time. If you are a high net worth individual and need a personal touch when it comes to planning your stack and financial protection, please take advantage of Summit's consultation service and book a call with them now. The link to do that is in the video description below. Whether you are high net worth or a regular Joe, your business is important, and new customers get 5 ounces of silver at spot when you use code NEWCUSTOMER at checkout. I will leave the link to that deal in the video description as well. Okay. Let's dive into the core question. What does it take to be a top gold stacker, and what does that mean for someone over the long term? To start, I just want to put a couple of things into perspective for everyone watching by reminding you all just how fundamentally rare gold and silver are. According to the Royal Mint, there are only about 25 billion ounces of silver and 10 billion ounces of gold that have ever been mined in history. When we focus in on gold, that means there are only about 1.2 troy ounces of gold per person in the world today. I know that may shock some of you to hear, but these are the numbers according to the experts. It shows you that even a small amount of gold really goes a long way in 2025, especially when you consider a disturbing economic fact. About 59% of Americans cannot cover a $1,000 emergency. This means they do not have that much available in liquid savings. Most people around the world do not even make $1,000 per month. That puts even modest amounts of precious metals entirely out of the reach of the majority of the population, since $1,000 today will only get you about 19 ounces of silver or a quarter ounce of gold when measured at spot price. With that crucial reminder covered, we jump to my estimates of how many people actually own gold bullion in 2025. If you want to see the full explanation of my methodology, it is covered in a past video, which I will link up in the video description below. But coming back to the numbers, they have been slightly revised versus the first time I covered this topic, but they still include owners both big and small. My model shows that about 65 million people worldwide own some type of gold bullion today, which is roughly 0.8% of the world's population. I estimate that there are about 350 million ounces of gold bullion held privately amongst these people, not including institutions, bullion banks, or ETF holdings, leaving about 5.5 troy ounces per stacker. Getting straight to the full breakdown, my stacking levels for top gold holders remain very close to the last numbers I presented, while the US dollar value of these stacks has absolutely skyrocketed. As things stand today, To be in the top 20% of gold owners on the planet, you need to have a minimum of 15 ounces of gold, valued at nearly $65,000. To be in the top 5%, you need 51 ounces of gold, valued at about $217,000. And to be in the elite group, the top 1%, the creme de la creme of gold stackers, it takes 165 ounces of gold, a number slightly higher than in my last video. At spot price today, that comes to a total of $700,000 worth of gold bullion. Now, although I have scrutinized my assumptions, I thought it was only fair to repeat the exercise I did for silver and compare my numbers to the numbers generated by the Grok AI model from X. As you can see here, when it comes to base assumptions, Grok and I slightly differ on how many people own gold bullion, with Grok's number of 125 million people being nearly double my number. The Grok AI also assumed that there was more physical bullion owned privately than I did, but the amount of gold owned per gold stacker ended up being very close. And yes, I asked the Grok AI model to exclude ETF and other institutional holdings from these numbers, just as I did in the silver video, so we are comparing apples to apples, physical bullion in hand for gold stackers. What the AI came up with is displayed here on the screen, with my numbers shared in the small text underneath for comparison. According to the AI, to be in the top 20% of gold stackers worldwide, you need 2 to 5 ounces of gold, which is much lower than my estimate of 15 ounces. However, moving on to the upper levels, you can see that my numbers actually match up very closely with the AI's numbers. The Grok AI suggests that a stacker needs a minimum of 20 to 50 ounces of gold to be a top 5% stacker, compared to my estimate of 51 ounces. And to be a top 1% stacker, the AI suggests you need to hold between 100 and 250 ounces of gold, with my number of 165 ounces falling exactly within that target range. Let me know what you think of my numbers versus the AI model numbers in the comments section. But before we move on to the most important part of the video regarding how much gold you need for retirement, I just want to remind everyone watching about how rare gold is, and that we are rapidly reaching a moment where a heck of a lot of people are going to want it. So, no matter where you fall in this pyramid, just understand that having some gold is good, and most likely puts you way ahead of the average person who does not own any gold at all. With the crucial data on top stacker levels covered, it is time to move on to this week's most important viewer question, a comment submitted by Blaine Stafford, who mentioned how this information has been helpful in planning for retirement. I absolutely love hearing that, because preparing for retirement is, in my opinion, the single best reason to stack precious metals. Why? Because gold does more than just hold value. It performs its best precisely when you need it most in the aftermath of a stock market crash or during periods of major economic uncertainty. Since the year 2000, gold has significantly outperformed the S&P 500 index, even when we factor in dividends. Gold is a store of value that people have been able to rely on for thousands of years, and I do not think that is going to change anytime soon. That is why gold should be a key foundational part of your retirement plan. In the United States right now, a basic retirement plan means making sure you can cover more than $700,000 in life expenses once you finish working. If we conservatively factor in roughly $2,000 in monthly Social Security payments, you still have to cover almost half of that figure to live an average lifestyle in an average U.S. state, and this applies to most of the English-speaking Western world where the majority of my viewers reside. That said, for the sake of this financial exercise and to remain consistent with the analysis we performed for silver, we are going to assume a minimum viable retirement target. In recognition of the fact that many Americans retire and live off Social Security alone, a sad but true fact, we are going to assume that you need to retire with $250,000 in liquid investments to supplement a very basic, modest retirement. I want to be clear, $250,000 is still a better minimum than most people are going to achieve. So please keep that baseline in mind as we run through these sobering numbers. According to the latest data, which has been updated since I covered this topic for silver a few months ago, the median 401k retirement accounts in the United States remain dangerously underfunded. I suspect the same situation holds true for people in most developed countries around the world. What this table on the screen shows us is the stark reality. Even at record gold prices today, stackers in the top 20% of the gold pyramid holding 15 ounces of gold, according to my numbers, do not have enough to cover a basic, modest retirement. Even when we add the median 401k balance to that value of gold, People approaching retirement age and at retirement age right now are only able to fund 64% of that minimum $250,000 target, leaving them with only about $160,000 in coverage. The value of gold versus fiat decay. Luckily for gold stackers, we know the financial reality. It is not just the price of gold that is going up. It is the fundamental value of the metal that is increasing when we compare it to many things we buy in our daily lives. I demonstrated this very well when I showed you all the change in price of a new iPhone measured in dollars versus gold and silver from the 2007 launch compared to the September 2025 new iPhone launch. The value of gold is accelerating because trust in fiat currency government-issued money is falling, and central banks continue to buy gold aggressively as they replace US dollars on their balance sheets. So, let's update these calculations to reflect my projected 2026 to 2027 price target for gold at nearly $5,800 an ounce for those of you counting on higher prices to bail you out. Even when we adjust the value of 15 ounces of gold, the minimum for a top 20% stacker, to reflect that higher future value, the results do not change drastically. Every single age demographic would still fall short of reaching that $250,000 minimum needed to cover 15 and a half years of retirement. People approaching retirement age would only have 73% coverage even when factoring in their 401k holdings. In fact, it is not until you get to 25 ounces of gold at that projected price target that you start to get within reasonable striking distance of the minimum needed to cover your retirement when paired with a median 401k balance. If we divide those 25 ounces by the 186 months you theoretically need to cover in retirement, it works out to a little more than 1/10 of an ounce of gold per month. The actionable lesson, the 1/10 of an ounce rule. The lesson here is simple and actionable. Even if you are a stacker on a tight budget and you want the stability that gold provides to protect you during retirement, and you are 50 years old or younger today, getting 1/10 of an ounce of gold each month on a schedule until you retire can mean the difference between struggling to get by on Social Security alone and having something extra to help you get through those harder months. My point of view is that having 25 ounces of gold is a very good target to achieve in order to prepare yourself for retirement. I want to address a few criticisms I am certain to face in the comments section regarding this calculation. The first criticism is, what if I live longer? That is absolutely possible, and I wish that for every one of my viewers. The second is, it is possible you may need more per month to cover your expenses, especially if you have a higher standard of living. And finally, I also want to address the fact that gold price could go much higher than the target I have used in this video. Not only is that possible, I think it is very likely. The message here is not for you to turn off your brain. It is for you to consider your situation, how long you plan to live, how much you want to spend, and what you think gold can reach at a minimum. Do not plan for your dream price. Plan for the worst-case scenario for gold's price and make a plan that fits your life. But consider these numbers while you do it. Because I think having 25 ounces of gold, or looking at it maybe a bit differently, a minimum of 1/10 of an ounce of gold for each month you plan on being retired, is a great starting point and a must-have pillar. If buying 1/10 of an ounce of gold to cover each month of your retirement is still too much to ask for those of you who are on a tight budget, and I respect and understand that, start with buying a gram of gold per month, but make sure you start now. As I have demonstrated, gold is an important pillar of a retirement portfolio, and having something is unequivocally better than having nothing, especially if Social Security or your national pension program runs out of money and you are left covering the entire cost of your retirement. The current pullback in gold and silver prices is a gift, a momentary pause in the relentless destruction of fiat currency. The fundamental case for precious metals has never been stronger, resting on the inescapable reality of ballooning global debt and the accelerating debasement of the US dollar. The sheer rarity of gold, with only 1.2 troy ounces available per person on the planet, demonstrates that even a small accumulation places you far ahead of the average American, who cannot even cover a $1,000 emergency. To reiterate the price of entry into the exclusive circles of gold ownership: top 20%, 15 ounces of gold, a minimum of $65,000. Top 5%, 51 ounces of gold, a minimum of $217,000. Top 1%, 165 ounces of gold, a minimum of $700,000. While my model slightly differs from the Grok AI model on the entry point for the top 20%, both models converge strongly on the elite levels, confirming the rarity and concentration of wealth among the top tiers. The disparity between these ownership figures and the dangerously low median 401k balances highlights the urgent need for a shift in financial thinking. The $250,000 minimum retirement goal is simply not achievable for most people without supplementing their income with an asset that reliably outperforms inflation and the declining purchasing power of the dollar. The 1/10 of an ounce per month rule, accumulating 25 ounces of gold, is the pragmatic, disciplined strategy that provides a necessary hedge against the inevitable failure of government social programs. This strategy ensures that your retirement fund is anchored not in the promise of fiat currency, but in the enduring value of a time-tested asset that thrives when the global financial system is in crisis. This is the path to ensuring you are an owner of real wealth, rather than a victim of currency decay.